Yeah, how's your mom? Morning, everybody. Welcome to the Daily Forex Trading Strategies session. Today is Monday, June 22nd, 2015, just after 7:30 in the morning New York time, 2 hours before the equity open. Now, every Monday, we take this opportunity to sharpen our saw, or saws. We do so by doing a couple of things. First of all, we go over the calendar for the week to look at event risks, opportunities. We also look at commitment of traders report to see any change in large positions by hedge funds and other institutional traders in the market. And then lastly, we'll do some technical analysis, ideally looking for swings for the week. What do you think? Smell like a plan? Cool. Just so these webinars are now in place on forex.today. Feel free to join. And also you'll see there's quite a bit of analysis. So today is the 22nd of June, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At least 10 trading ideas for the day. For today, at least 10 so far, and it's only the midpoint for the day. May you know who posts them? Yes, it says right on there. A lot of these, all right, let's see. There's Paulie. Excuse me. I've known Paul for, I don't know, 4 years. Trained him how to trade. There's William. I trained him how to trade, maybe, I don't know, 7 years ago. Oh, here's YJ. YJ, there he is. I taught him how to trade, oh, I don't know, 5 years ago? 4 years ago, 4 or 5? YJ's in the room. 5 or 6? All right. Who's counting, right? I heard my USB port disappear there, so hopefully you can still hear. Right? Igor, taught him how to trade for many years. So there's lots of guys. There's a whole team, and we're adding a few more. But anyways, let's get going. What I wanted to do today is go through the calendar first, and then we'll go through the commitment of traders report, and then we'll do some trade planning ourselves. Okay, so let's get going. There's no time right now. I guess I should introduce myself. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. TradersWay is the one sponsoring this event every single day for you. We're an ECN that offers Forex, metals, energies, indices, binaries, awesome blossom, all the good stuff. So we're trying to earn your loyalty by providing these educational webinars in advance. Hopefully one day you'll feel educated and confident and comfortable enough to open up a live account. And when that happens, perhaps you'll choose TradersWay as your trading partner and prime broker over your many years of success trading. All right, so let's get going and do the calendar. Let me also remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, so here we are, news calendar of the week. Can you guys see this okay? Yep, okay, wonderful. First thing I'd like to do, since we're planning the week, let's take the noise out. Oops. And just look at 3-star stuff. But if you're looking at, what's happening today, you'd want to see, everything, right? Certainly 2 and 3 stars. But let's just filter this down. And it is a fairly quiet week. There's a lot of U.S. news, but it's, very mediocre news because, again, we're going into summer and we're focusing on what happens when traders get back from summer, right? Is the Fed going to raise interest rates in September or December? That's pretty much it. And, modest news is just not going to impact it. Okay? Probably the only thing left would be inflation data and non-farm payroll. Okay? So if we were getting super huge non-farm payrolls all summer, getting 300,000 a year, 300,000 a month over the summer, then maybe September. But see, I don't think they've, the Fed's interested in transparency, and they haven't said September. But what they might say in September is December. But even then, I have my doubts. But whatever. So all this other stuff, you know what I mean? Is it off? See, I don't know. It's so funny because it was absurd to, to think of it in the first place. So, but we'll see. Anyways, let's move on.com. All right. So, Chinese PMI. That'll be interesting. That could move the market. Look at these numbers, man. Anything less than 50 means the economy is contracting. Bad. That's bad. Weddy bad. That's, so use this maybe as a canary in the coal mine here. When Europe covers Chinese PMI, Chinese manufacturing data should go back above 50, and that'll be the green light for global macroeconomics. Probably risk on. That's pretty bad. So that's what's forecast. That's the last time this, so pay attention to that. French PMI, nobody cares about French PMI. Stupid calendar. So whatever. All right, German PMI. Yeah, okay, fine. Let's pay attention to that. Look at them. 51.1 last month. Yeah, Igor, global contraction would not necessarily be good for commodity currencies. Correct. All right. So anyways, Germany doing much better. I'm wondering if they enjoyed 1 month of cheap euro. But whatever. So that's really what we care about, right? Durable good orders out of the United States. Yeah, okay. Yeah, sure. Fine. Yeah. Again, what I've always said is I use durable goods to represent stainless steel refrigerators. Because perhaps people have bought a home, refurbished it, put in new appliances, and then they're going to flip it and make a ton of money. The real estate market here is, quite good. So it could only get better. And I heard the higher risk buyers are re-entering the market. which is interesting. And it could just be first home buyers and stuff. But they're starting to get the credit and be able to get in the have the opportunity to buy a home in the United States, not just big investors. So anyways, durable goods is a sign that people are spending money on ticket items. Okay, German IFO. Excuse me. Fine. Yeah, is German IFO important? Yes. Is it more important than Greek meetings? Meeting with the Greeks, the Greeks and deals, and the Greek deal and dealing with the Greeks? No. So. Weekly unemployment claims in the United States? No, just not that big of a deal. Trade balance. I like double checking this because it's Kiwi. Yeah, yeah. The trend is down. Right, trend for the Kiwi itself is down, and so we want to see if that's going to continue. So yeah, that'll be interesting. So far, like Chinese PMI. Fine. Everything else, blah, 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 blah. Trade balance, okay, that'll be a nice little scalp again in the Asian session. And Japanese CPI, absolutely. So I'm gonna look at this as like 3 scalps, all in Asia. Hoo-ha! Cool. Tuesday, Thursday, Friday. All right, and the rest is just what? Trading. I look at this after all the noise we've had, and I think it's going to be a good trading week. The big question mark is Greece, right? So I would look at it as when I start the day, I'm going to look at it as risk on or risk off. I'm going to try to simplify my thought process. So somebody said before we started the webinar that, oh, the markets are confusing and stuff. And I'm like, really? Because it's just like dollar strength. That's all I see. So like just pick anything by the dollar, you'd be fine. So, right, not confusing to me. And that's what I mean by risk on or risk off. Simplify it. All right, well, in that case, you picked the wrong pair. But at the London Open, it did go up. Did I tell you about wheat? Keep your eye on wheat. Canada's going to miss on their wheat production this year. And so wheat could possibly go up, which would be the first sort of rally in commodities that I can think of in a long time. Because iron ore is way down. That's going to hurt Australia. But I think wheat's going to be up this year. Why? I think they're going to have a poor crop. Okay. What else is up? Cocoa's up, isn't it? Cocoa and wheat. Of course, weather tracking. We're talking about food. What else is there? All right, cocoa went up last year because of Ebola. But figured, well, what if all the workers died? Okay, which wasn't a bad question to ask. This year is just poor weather in that part of Africa. In Canada, just poor weather. That's all. So that's that. Let's move on.com. Let's talk about COT. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. Let's talk about COT. All right. Is that clear? I think it's clear, right? Hoo-ha. Nice. By the way, thank you for being on my team. I don't know if I say that enough. If it wasn't for you, I'd just be what? And like today, I woke up 1:30 in the morning. I watched some TV. I looked at my charts. I did some analysis. I shorted the Euro USD. It went down 20 pips. I moved my stop closer. And it went down 25 pips, making a lower low. Moved my stop to break even. Went all the way down to the weekly central. Took my 70 pips profit or 75 or whatever it was. Went back to bed. Like there'd be no reason for me to get up. I'd probably sleep into 9. Like, yeah, I guess I'll get up and I'll scalp the equity open. But I got responsibilities, man. I got you to worry about. And I appreciate it. I honestly do. It keeps me focused because what could happen is you just get in a lull. And I had a bit of a lull last week. I think I showed you, right? Like 2 or 3 days in a row, I just wasn't making money. It happens. But I can't let you down. I might let me down. I might let my wife down. I might let my children down. And my parents might be terribly disappointed. But you, I can't let you down. So honestly, thank you for being on my team. You forced me to stay as sharp as I possibly can be. So we're going over COT. I probably wouldn't do it. But because of us, the we in team, because of us, we do it, and we're always the smart money, I think. Yeah, well, no, I appreciate it too. Wyatt had the same trade. Yeah, it wasn't a complicated trade. I was at short 95. The only thing is, um, um, I made the decision, and it was like 03. And by the time I went the process of entering the trade, it was like 95. I'm like, I look up, I'm like, what? It moved like 10 pips in a very small amount of time. But anyways, and sometimes those extra pips are what's keeps you in or gets you knocked out of break even. So I'm always worried about that. But all right, so let's get going, baby. Thank you very much. Long euro positions. Long is gray, and woo, yep. Some people went long last week. Okay. I saw it topish, and it was overbought on like 3 time frames, just FYI. But as of Tuesday of last week, people were buying the euro, and you look at the short positions, and they were no longer shorting. In fact, you could see over the series of at least a couple of weeks, people getting out of the euro USD short. And only last week did they actually kind of buy it. So the question is it over? Well, I don't know. That's why we're here. Okay, so that's interesting. And look at that. Price really hadn't changed, but people were buying. So the net, though, the net is bringing us a little closer to the zero line, which in my thinking, because I have a bias, what that makes me think is we'll get everyone that was short out of the market, and then we'll all short again. It's going to be some, right? That's kind of what I'm thinking. We'll get close to neutral, right? That's what I'm looking at is the neutral line, zero. No, I'm not looking at price. And we get the market neutral maybe over summer, and then we start tiptoeing back into the Euro USD short. Or, of course, something horrible happens with Greece and the thing just moves. Igor says Euro USD 4-hour chart. What's the, oh, because the 21 is above the 55? All right. Okay. Would that be it, or was there a reason you're bullish on the 4-hour, Igor? The price action kind of, or what do you got going on? All right. Well, it like on the daily, Igor, I see it as a double top with a Stokes that wants to make a cycle down, which could be 2 weeks down. But I think what will happen is we'll have a big week this week and maybe part of next week, and then it'll fizzle out. And by the way, I told you that a month ago, that would happen the week after FOMC will be the last full trading week of good, full average daily ranges. And then next week, we'll move into summer trading, which will have lower volume and volatility, and we have to adjust our expectations and even our trading strategies. How many people remember that? I told you it was coming. It was there. Write it down kind of stuff, right? Well, guess what? Guess what? I still think that way. So, cool. So, this is going to be a good trading week. And then we're going to have to adjust. Well, exactly, Igor. Those are very good strategies. 33.66, 25.50 OCOs. I mean, now you're talking my language. Okay, we'll talk about that later, Mark. But yes, cool. That makes me happy, Igor. Thank you. Yeah, well, you're exactly right, man. Makes me all choked up inside. Oh, verklempt. Yeah, it's an OCO. Yeah. I was on Bloomberg television talking about OCO orders. How cool is that, huh? All right. Pound. Okay. Gray. Anyone buying the pound? No, not really. Anybody selling the pound? No, not really. And we hit the. Well, no, we're not neutral. Interesting, right? Because we got these huge moves here. Hang on, I want to check something. This data is old, right? What's it, 15? Oh, no, that's right. No, that's right, because it's Tuesday. So anyways, just not a profound trend. Well, it's, no, well, right. Cadell or Sadel? Because it's Cadell. It's nice. I like that name. Anyways, it's somebody has to be buying it. No, that's not true. But that's what we're looking at. Some people bought it. Some people sold it. Okay, which drive up price. It helped that the pound was strong and the dollar was weak at the same time. No, oh, did it do that? Hang on, let's go back. Okay, let's do it that way. Yeah, well, it's just You know, price went up, but of course, remember, this is Tuesday of last week. It's not significant. So anyways, let's keep an eye on it. Dramatic increase in long positions, small increase in short positions. Net came up. And again, this was Tuesday of last week. We know now that technically it double bottomed, right? Did anybody buy the bottom last week? Where was it? 2250, I think it was. Technically, like a double bottom like this. I think we're still here. Sebastian, you got that one? Yeah. Your stop's at break even? Are you doing like a hero or zero? Cool. Yeah, well, you're being challenged by the 4-hour 55, which is fine. All it's saying is you're likely to have a pullback and then an extension. We're also on a roll reversal for bears. If you were a bear, you'd be selling sort of in our zone here on USD yen. So if you can survive that, then the next wave up, and I don't mean Elliott wave, next move up could be significant. So I would say if you can survive, you know, let's say the rest of today, I would start playing the monthly pivots and not even weekly or daily anymore. So good job. So what we want to see over time is I want to see this go up. And I want to see this go down and this come down. Aussie was a great short today at 78. You might say, well, Wayne, it didn't actually touch 78. Really? All right, might as well forget it then. Also, it did hit the daily R1 and stop. It went, I think, 3 pips above the daily R1 and then reversed. That might be a sign, right? So that's a decent short. It's only produced 50 pips, but you know, traders can't be choosers, right? Traders can't be choosers. You can't influence how far it falls. I would have had my stop at 65. Sorry, it's 76.50, but not expecting to get there. I just know that's the bottom. Well, one way to look at it, Mark, is 50 pips a day is 1,000 pips a month, and that should be your first basic sort of target as a trader. 1,000 pips a month. So, you know, do it here and there and stuff like that. So, Aussie, you know, a few people got out of their shorts and nobody went long, which means sell the rallies. Right? That's what that means to me. Sell the rallies. Kiwi's in trouble, isn't it? Let's see, adding to shorts, adding to shorts, adding to shorts, adding to shorts, dramatically adding to shorts, dramatically adding to shorts, dramatically adding to shorts. But look what happened last week. Somebody's trying to catch some yield, huh? That is a dramatic increase in people longing. Well, they may get knocked out, but they're they're going for it, aren't they? Well, the way to play conservatively, Mark, is you stay a bear until the Reserve Bank of New Zealand, the RBNZ, says we're going to stop cutting. Then you go along. Otherwise, what would the guessing be about? As far as my strategy, I mean, I love technical analysis and stuff, but my general strategy is global macroeconomics set by central banks. That's how I would define my strategy. I like global macroeconomics, but only in relation to what the central banks have analyzed. So the central banks also like global macroeconomics. And they'll analyze how it's impacting their economies, and then they come out, due to modern central banking theory, transparency is important, so they'll come out and tell you what to do. And then I do that, and it's been very good. The rest is just guessing and is amateur hour. So when the RBNZ says we've cut and we're going to hold for a while and see how it goes, then I'll start tiptoeing in long, because that'll be the bottom. Why hasn't the Aussie dollar fallen below 75? Let's just take a very basic discussion. It fell from 90. Why will it not drop below 75? I think the absolute low right now is 75.50. Then another solid low is like 76.50. But why can't we go lower? Because that's what Governor Stevens told us it was worth. The central bank, the leader of the central bank, the Reserve Bank of Australia, said it's 75. And that's it. That's it. Boom. That's the value. So these things I pay attention to. It's only worth 75 according to Australia. But they might cut rates again, but we'll see. Yeah, in fact, I thought they said it wasn't worth 75 anymore. But the market hasn't behaved that way. Maybe I misunderstood. Yeah, but your long-term target doesn't mean anything, I'm sorry to say. Nor does mine. The only long-term target that matters is Governor Stevens' target. It will not go to 65 unless Stevens gives it permission. Truly. So just be careful, right? All right, and some kitty cat. No change here, huh, basically. Bias is the same. Slight increase in longs. Flat here, but just nothing. So it'll stay range. And it's been range bound for a while. So the recordings of these videos, I will start putting on Forex today for it, and there will be a video section, and they should be down the right-hand side as well. I'll be Okay? Isn't that nice? So I hope you use the sites. Hang on, boom, 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 boom. Oh yeah, there's TradersWay, absolutely. No, we're just supporting Forex today. All right. All right, So I'm just looking at Euro USD, 5 minutes to cycle up for, a while. Seems like I have a role reversal in here. Here's the old one here. So I might play that range a little bit. Now, we had this big drop. London moved 91.5 pips. A short at the 50% would have been a reasonable idea. If you didn't take that one, you must be waiting for the 618, and that also works. And I think, man, you must be patient. Well, Oren says, looks like New York selling dollar. Well, be careful. I often trade New York in such a way that I throw down a front run for the equity open. Does everybody know what that is? What? I've been teaching this for 1,000 years and you don't know? Oh, awesome, because I'll teach you, dude. Yeah. So a front run is sort of like a surfer that's trying to catch a wave. And to catch the wave so that the wave carries you, you have to drop in just before the wave, right before the peak of the wave. If you drop in too late, it just goes right past you, right? You drop in too early, and just drops on top of you and whatever. Ed Sakota said it? I didn't know that. I thought I was making it up. Every poet is a thief, huh? Yeah. So, with this in mind, we know, and this is an event-driven strategy, right? We know the U.S. stock market opens at 9:30. So the front run for that is somewhere around 8:50 to 9:10. So just before or maybe even just after 9 o'clock in the morning, you throw down a trade. And I don't know, I mean, this might be in the direction of your bias, it might not be, but the equity open is the equity open. It can go one way or the other. I don't really care the direction because it's a scalp. But the prime goal is that before the equity opens, so let's say 9:25 a.m., I'd like to be certainly 10 or 15 pips in profit, and I'll move my stop to break even. And that's it. So I might do it like a 25-25 OCO. $25.50 OCO. But before the market opens, I want my stop at 0. So I cannot lose money. And it's not the S&P 500 that I'm trading, Anthony, but that is the event when the dollar can be impacted. So I'll trade a dollar pair, let's say euro dollar, 40 minutes, let's say, before the equity open. I'll look for like a 5-minute Stokes cycle at some sort of resistance point, throw down the trade, because even if I'm wrong, I should be able to get that to break even. I mean, even when you're wrong, you should be able to make 10 pips. Jam the stop, take a walk. But Anthony, what it should be is hero or zero. And maybe, let's say, half the time you're right. It adds up. Okay, but the idea is at 9:30, the money shows up, but you're already in. So what happens on days when you get the direction correct? How far does the Euro USD move in a New York session? Monday it moved almost 60. Right, I mean Friday. Thursday it moved 96. Wednesday moved 150. This one moved 40. I'd like to do, I don't want to make a change. Hang on. When does New York open? I have it, that's probably 7. Let's try 15:30. I think it's 16:30, isn't it? On these settings, which can be very weird. All right, come on, let me update this for you. 15:30. All right. All right. Update. Yeah, there we go, a little better. So anyways, I don't know if that helped. But yeah, so that's one of the things I look for every day. So I can jam one of those. No, it's typically not a 100 pip move. No, typically, you pick up 30 pips pretty easy and you pocket that, right? You risk 15. Let's say you do a 15-30 OCO, and by the time New York opens, your stop is at 0. And it's just like the volatility kicks in. You get this volume of money comes in, and for 15 or 20 minutes or 20 minutes to a half an hour, it takes off, and you capture some pips. No, I don't mean the full D average daily range, the New York average daily range. So today I have the session moved 91.5 pips. My entry, guys, was here, but I actually entered on the red candle because I sold it up high. So I was short there, and I exited right there. Boom. Weekly Central. Oh. Yeah, I guess so. Stunning. Now you might say, Wayne, I don't believe you, you dirty dog. I say, well, I'll show you my chart. There's my chart, if you want to see it. So I'm short right there. Right? You can see there I'm short at 95. Right? You can see there's the little dotted line. And I got out at the weekly central pivot. You can see that I thought it was a double top, as I indicated here. Hourly way overbought. 15-minute wanting to fall. 5-minute Oscar Mike, but you can see I shorted it way up high. So it was just starting to cross. So I had a 5-minute down, 15-minute down, hourly down. I'm a bear, and I shorted at a psychological level of 114. Yeah, there was nothing amusing about that. But that's what we're supposed to do, right? That's all. Cool. Oh, there definitely was a second chance. Yeah, the better trade. The better trade was the lower low, lower high, drop it like it's hot. Absolutely. I just got lucky on the top and I got lucky on the bottom. What can I say? Okay, so I'm going to pay attention to this level up in here. 1, 2, 3 wave correction and then down. Any Elliott wave, guys? Who's an Elliott wave trader? So what is this? It's going to be a 2 wave? So you're going to count to like this then, right? 2 wave expansion should be even farther down? I don't know. Elliott wave, guys. Yeah, but to me it's the same, Wyatt. But I would rather buy pound dollar on days that the US dollar is weak. See, I'm a dollar trader. Read my book. I tell you right off the bat, I'm a greenback guru. That's where every trader should start. Get to know fundamental and technical analysis surrounded by the reserve currency. Become a greenback guru. The rest is noise. If you can't trade the US dollar, you're going to fail as a currency trader. You can add layers of complexity later, but in this case, I'm waiting to buy the dollar. Well, what about the pound? Well, about the pound. I'd rather sell euro right now. Now, if the dollar was weak, I might want to buy pound dollar, but the dollar's strong, so I'm going to sell euro dollar kind of thing. Okay? Simplify everything, folks. Simplify everything. So, if you were going to buy the pound dollar, I might be interested. But then I'd have to be bearish on the US dollar. Well, it might be bearish today. So I better put my money where my mouth is, right? But you said, I think you said pound dollar short. Well, I don't want to talk about that. All right, so how about that? You buy it off the 21 on a roll reversal. Okay, that could be a strategy. That's a 4-hour. Drop into a 60-minute. How does it look for the New York Open? Because I want to trade around a market open, right? Either the London Open or New York Open. How does that look for the New York Open? Wow, that seems like a nice little kick off of previous support. Sorry, what used to be resistance, now support. With a 4-hour 21. Okay, yeah, but that could still take 8 hours, right? So let's drop into a 15-minute. Oh, 5A cross up after a roll reversal. All right, so, well then, like I said, if I were a bull, that could look very interesting to me. Because of that situation, you notice that we've made a 786. We're not trending, or actually we made 100%. So we're not trending, we're range bound, and therefore I'm going to play it like this. And if we're in a dollar strong trading week, then it's going to and you will be out at break even. If you're right, it'll go right, and then so make a decision. Now, if it breaks low, then I'm going to go You already bought it. Well, it depends on what your trigger was, Igor. And if you had that level of analysis, because it's a higher risk trade because it's made a lower low. So I'm telling you, there's lots of people that are going to play this area. Let me draw it. There are lots of people that are going to trade this, man. They're hungry for that. There are tons of people. Oops. They're going to short that. So as long as you knew that and you made the decision, cool. If you didn't know that, then you're trading blind. Okay? But you can make the decision. That's fine. So no Elliott wave people out there, huh? too bad. What else is going on? Aussie bounced at 77.50. Bang, bang, bang. Yeah, let's take a look at Aussie. So, Igor, are you looking for dollar weakness or yen strength, or both? What's your bias on that? This is the Aussie, by the way. Yeah, we're caught right in the middle of a range, inside day. Can be a little dangerous, but it's, untradeable. But yesterday's high, yesterday's low, and we're right in the middle of that, huh? That worries me, because you can get scenarios like this is moving that way, and then you take the other high where that was, and that's going to be going that way. You can be the monkey in the middle. You can be a bull, bear, pig, or a monkey. So anyways, yeah, that's kind of what I'm looking at. But I'm going to be playing the short. But the short at the psych level is pretty easy. This, yeah, I guess you'd look for the fib retracement. But I kind of feel like I'm shopping while I'm hungry, right? Yeah, well, why you don't want to be the monkey in the middle? All right, so that's inconclusive. I'll watch that maybe on the equity open. I mean, look, if this thing doesn't drop on the New York Open, then I'm just going to take a walk. So that's the nice thing when you use your clock, guys, as a technical indicator. If the New York Open doesn't move this in my favor, then I'm just going to ignore it. That's how you see I have confidence because I have control. Well, I have confidence because I'm consistent, and I'm consistent because I have control. So if that doesn't do what I want it to do, I won't trade it. So I'll watch that a little bit closer to the New York Open, and maybe I dump this. Maybe sell it at 77, 77, 77, 77. But, you know, I don't have to do anything. Let's look at that yen. And I think it was Igor talked about it. But Igor, you got to be a little careful, because if you look at it on a daily point of view, this does this. Okay? It hits the lower Bollinger Band and elevates. Or the 55 or whatever. Okay? So this is the double button that we identified last week. But we also got like that. So you got to be careful when you're saying you're trading a lower high into that. Well, okay, right? So now you want that. Did this not update? Is it a BO? Oh yeah, it's a binary still. All right, so yeah, you're trading this, right? So it's okay. So you're saying, oh, well, what if we do something like that? Sure. Except I think there's a lot of people who got this on their mind. And they could do it here and here. I don't know. I just, yeah, equity open and stuff. And it's a pretty short-term trade, but, right? Yeah, it seems to me you would have short time ago if you were going to do it. Right? Unless you're waiting for the second chance and then it's going to come up and then you take a shot like that. But if, yeah. Yeah. And I suppose the upside is if you can wait for that to set up, your stop's going to be here. Oops. Well, I guess that'll work. Your entry will be there, your stop will be there, and risking a whole lot. All right. All right. Sure. The other Igor says no trend on the 4-hour. Well, if you listened about a half an hour ago, I said the USD yen was on the 55, on the 4-hour 55. So you would have already put all of this together. So like, that's what I'm saying. Like, if you had paid attention and you were already bearish, so you can't, I'm not going to put you into a trade. If you're already a bear and you were waiting, maybe you didn't know this was the 4-hour 55, but I told you. So then you said, oh, that would have been great. Oh, that's perfect, you know, and off you go. But you should already have been in it. You shouldn't have been waiting around trying to figure things out. Again, if you're not waiting in Forex, you're not trading properly. So, you know, you should have this idea that you want to sell the rally. And the next dynamic level of resistance is the 4-hour 55. And you like the way that the hourly was already overbought. All right, that kind of stuff. And you're just waiting for the trigger. Yeah, well then that's fine. See, that's the thing. If it's against your bias, you don't have to trade it. Now, if I'm doing short-term trading, I don't really care about my long-term bias. So sometimes I'll trade it because it's a trade, right? Like the front run I was telling you about. No, there's no real bias about it. Typically what I'm doing is I'm trading a 5-minute cycle into the equity open. My only goal is to jam it at break even. So like this 5-minute is way oversold. I might be waiting to buy it. So then I'd say, well, where am I going to buy it? Where's the support? All right, well, there's the support. So I want to get in there a little bit lower maybe. And maybe I'll take the next 5-8 cross up, you know, that kind of thing on the 1-minute chart. Long it and be long USD yen going into the New York Equity Open. At support, okay, looks like a near psych level, which we possibly are. And I might long it going into the New York session and be done. Is it necessarily my bias? Well, maybe, maybe not, but that's not my strategy. That particular strategy is I want to long it at the equity open, probably near 120, you know, 123000, and start the New York Open. I did it again. North, right? Heading north. Okay. What did I say? 1530 OCO. Right? So how could you do that? Well, I could do something like this. Auto stop. 15 pip stop. 30 pip limit. And wait. Yeah, that's essentially it, Wyatt. That's my support. What, right? If you're a bull, where's your support? 123000000. What's the strategy? High volatility, event-driven strategy based on the open of the New York stock market in approximately 45 minutes. So if you can hang on long enough and jam that sucker at break even, you're going to be a hero. If it doesn't work out, you're going to lose 15 pips. But if it works out moderately okay, you'll probably be at break even before that happens. You get it? Now, if you don't like that, then what you should do is the opposite now. Wait for it to cycle, because it's probably going to cycle. That's why we have an oscillator. And maybe, you know, maybe 20 minutes from now, like 9:10 New York time, you're preparing to sell a 5-minute cycle that way. Yeah, this is a 15-minute chart. Just imagine it was a 5-minute chart, and you want to be short, probably a bounce like this, and then you want to be short New York Open. That's your alpha. Just pick one or the other, for crying out loud, right? So if you're a bull, buy it at support low. If you're a bear, sell it at resistance high. So maybe you do one of these, right? And you have it marked like this is your sell zone. So I might as well just make it somewhere between the 382 and 618. 50% would be fine. And you just wait now for the oscillators. So this will take a good half an hour to come up, which means it's going to be about 9:10. You guys get it? Now, the interesting thing, if you keep your risk-reward ratio 15:30, Well, really, if you do this right, the vast majority of the time, you're going to be able to move your stop. So really, you know, if half the time you get knocked out, it's break even versus a loss, your average loss would be more like 7.5 pips. And if your winners are all 30 pips and your losers average out to be 7.5 pips, it's a profitable strategy, isn't it? Even if 50% of the time you're not successful. And if you get good, you can beat 50-50 odd or a success rate. You can have a 65% success rate. Especially if you add in your break-evens, like you didn't lose money. The only time you lose, it's a loss is when it's either you've lost all 15 pips or all 7.5 pips. But one winner pays for those pretty quickly, right? So you can see it's a little dog and pony show. It's not going to be your bread and butter. It's not going to pay your mortgage. But you know what? If you can get it 60% of the time, you just, the volatility carries you and you pick up 30 pips, you know, it adds up. So there's 20 chances a month on average. Right? So you should be able to pick up an extra 300 pips per month. What if it's only 200? Well, if you're averaging 1,000 pips a month, then that's a 20% increase in profit. But it's funny how when I talk to newer traders, I say 1,000 pips a month, and they start to stutter. Like, I can't even imagine such an audacity, a whole 1,000 pips. Right? And they say, well, does 50 pips sound reasonable per day? Oh, yeah, you can do 50 pips a day. Yeah, well, that's times 20 days. All of a sudden, you know, but oh yeah. So anyways, you know, if you can have little tricks of the trade, but see, like that is a strategy. It's thought out, it's planned, you're waiting, it's lined up for time of day and all these different things, and to enter the trade, you'd have to have control and a plan. But you know what? Most losing traders don't have any of that. They don't have control, they're not waiting, they don't have a strategy, and they're not measuring their you know, the success of their trades and stuff. So I would suggest, for example, if you're interested in that type of trade, try it on a demo account every single day for 100 days. Okay? And at the end of 100 days, 100 trading days, you'll know your success rate, how many times you broke even, how many times you lost money, and how many times you made money, and then you can add up the total sum that you made and the total sum you lost. So it might be like after 100, let's say, you know, you lost, I'll make up a number, you lost $500, but you made 3,300. Subtract the losers from the winners, and you're like, you know what? That was a pretty okay strategy. All right, keep it. Go find another one. I call them a string of pearls. Okay? After, let's say, twice a year, you refine one particular strategy until you master it, like that. So you master that. You do it for 100 trading days in a row. which is months and months and months, right? But you, all of a sudden, you're really good at that one trading strategy, that one event-driven strategy. You're not a well-rounded trader, but you can do that one very well. Then the next, once you got that locked down, let's try another trade, like trading, you know, 1, 2, 3s after double tops or 1, 2, 3s after double bottoms. Do that a million times so you got that one locked away. Then how about front running London Open? Fantastic, good. Let's do that 100 times. Boop, 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 boop. Get it down, nailed, refined, you know, measured, adjust, measure, adjust until you've mastered that. So imagine, guys, after 2 years of intense strategy testing and refinement, you have 4 things you can do very well. 4, that's all I'm asking you to do. Over the course of 24 months, you perfect, through intense focus and study and refinement, 4 trades that you can do over and over and over again. And you know these trades, 60 or 70% of the time, you're profitable. So you're supremely confident, and you have the control to carry it out, right? You're just very, very consistent because of your control, therefore confident, and you just know you can carry this out. And now you have a career. You understand? That's a career. Like, these are skills that you can apply. So what do you do in year 3? Find a couple more. Just constantly work at these things. And get better and 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 better. And if you're doing it right, none of them really make a huge amount of money. Because the only way to make a huge amount of money is to increase risk. Well, you don't want that. But what if just in various situations you're able to pick up a little bit of money because of the favorable risk-reward ratio? And you're like, yeah, I see what's going on here. I'll risk 15 and I'll pick up 30. I'll risk 15, I'll pick up 45. And you know how to execute these trades beautifully. You're refining them cycles and cutting corners with 1-minute cycles, and it's beautiful. They're not huge money makers, but you're not risking much. They're just sort of bankable. All of a sudden, well, isn't that what trading is? Or are you always swinging for the 350-yard drive? Are you always swinging for the home runs? Are you in a perpetual Hail Mary state? Is that what wins Super Bowls? I think it's the consistency, isn't it? Any football fans here? I'd probably say, you know, a solid line, a good, solid running game, and a quarterback that doesn't freak out, and some receivers that don't drop the ball. I mean, I'm not asking for much. But I'll take that over like 3 superstars and everyone else are mediocre. Yeah, it's time. We got that front run coming up. It's already 9 o'clock in the morning. Should you be long in this maybe? I don't know. What's your strategy? What are you doing? What's the market going to be doing in 31 and a half minutes, guys? Are you going to be able to get into a trade and jam your stop at break even? All you're asking it to do is move 15 pips in the next half an hour. Can it do it? And if you get the direction right, you make 30 or 45, depending on what your OCO is. You see, I'm not asking for much. It seems reasonable, doesn't it? Well, try it on a demo account for 20 or 40 or 60 days and measure the results and maybe make some refinements and try it another 20 days. And if you're making money, keep it. If you're not making money, don't worry about it. Find something else. And that's your job, guys. That is your job. Your job isn't trading. Your job is doing the analysis and developing skills so that you identify profit opportunities at low risk. Right? It shouldn't be gambling. So you should say, well, you know what? This looks good, but I need this other thing as well. This looks okay to me, but I'm gonna drop on to take a look, see it, and then of course in 20 minutes I'll have my stop jammed at break even and I'll just walk away. Cool. Sweet. So again, thank you for being on my team, guys. Thanks for being a client of TradersWay. And I'll upload this video to Forex.today. And I will see you tomorrow. There's a difficult protocol for logging in. Is that true, guys? Can you tell me what it was? Yeah. Yeah, the link changed, but just go to forextoday.com, click on webinars. Of course, when I load that page, it kicks me out, but because I'm logging in two different browsers. But yeah, so just go to forex.today, click on webinars, log in. But I'll keep an eye on it. If it's difficult, I'll check it. See if there's something I can improve on. All right. Well, thanks for the feedback, and keep me in the loop if those problems continue, and I'll investigate it further. Okay. Well, the one I send, the link says click here to register or something like that at forex.today/ live Forex trading session or something like that. But I'll check it. All right. See you guys.